Hello everyone, welcome back to my channel. In today's class, we are going to learn about the asset disposal account. What it is, why we use it, and how entries are made when a fixed asset is sold, scrapped, or exchanged. Clear? So let's see the meaning of asset disposal. Asset disposal, it means what here? It means removing a fixed asset from the company's books when it is no longer in use. Removing a fixed asset from the company's books when it is no longer in use means, in simple words, it is the process of selling, scrapping, donating, or discarding a fixed asset like machinery, furniture, or vehicles. That is what called as asset disposal. This is the meaning of asset disposal. See here, when a business sells or disposes of a fixed asset like machinery, furniture, or vehicles, we cannot directly pass the sale entry into the asset account. What we will do when we are selling the any fixed assets, then we will pass the sales entry. But here, when a business sells or disposes of a fixed asset, we cannot directly pass the sales entry into the asset account. Then what we will do here, instead we prepare a disposal account. Here we will prepare a disposal account. Clear? So this account helps us to bring together all details related to the asset being disposed, such as its original cost. So this disposal account, it give all the details of the asset related to its original cost, accumulated depreciation, and the sale proceeds received, and finally the profit or loss on disposal. Clear? Means when an asset is disposed, the business must remove its original cost from the asset account, right? And we need to transfer the accumulated depreciation and record the proceeds received, if any. And finally, what we have to do, we have to find out the profit or loss on disposal. Clear? Now, when we will use this method, see here, this method is generally used when a part of the asset is sold and provision for depreciation account exists. Means here this method is generally used when a part of the asset is sold. Part of the asset, it means what? It means selling only a portion of a fixed asset. Selling only a portion of fixed asset while the remaining part continues to be used by the business. Clear? For example, a company, it has 10 machines. Company has 10 machines. Clear? Costing rupees 5 lakh. Costing rupees 5 lakh. Company has 10 machines costing rupees 5 lakh in total. Clear? If it sells 2 machines out of 10 machines, they sold 2 machines. They sold 2 machines. Clear? So it is called part of the asset sold. In this case, we will use asset disposal account. Clear? So the remaining 8 machines, out of 10 machines, we sold 2 machines. So remaining 8 machines, they are still in use. Clear? So in such cases, we cannot close the whole asset account. Whole asset account. So we transfer the cost only the part sold into the disposal account. Clear? To find out the profit or loss. In such cases, we cannot close the whole asset account. Clear? So what we will do, we transfer the cost of only the part sold. Means only here 2 machines into the disposal account for what? In order to find out the profit or loss. Clear? And provision for depreciation account exists. Provision for depreciation account exists. It means what? It means here depreciation is recorded in a separate account instead of reducing it directly from the asset account. Clear? Means here we will prepare, again we will prepare the provision for depreciation account. That is a separate account. Clear? So this is about use of asset disposal account. Now let's see the journal entries. Journal entries required for the preparation of asset disposal account. First one is transfer the cost of the asset disposed. That is asset disposal account debtor to asset account. This is for this transfer the cost of the asset disposed. For that the journal entries asset disposal account debtor to asset account, and transfer accumulated depreciation. After that we need to transfer the depreciation. So the entry is provision for depreciation account debtor to asset disposal account. Clear? After that we need to record the sale proceeds. That is bank account debtor to asset disposal account. And after that loss on disposal. What is the journal entry? Profit and loss account debtor to asset disposal account. That is when loss on disposal. If there is loss, we need to enter the we need to pass the journal entry profit and loss account. We need to debit the profit and loss account and credit the asset disposal account. And if there is profit on disposal, what we have to do? We need to debit the asset disposal account and credit the profit and loss account. Exactly the opposite of loss on disposal for profit on disposal. Clear? So these are the journal entries we need to pass when there is asset disposal. So when we will use the asset disposal, this method that is generally used when a part of the asset is sold. That case we will use the asset disposal account. So let's see one example. See here. For example, suppose a machine costing rupees 1 lakh with accumulated depreciation of rupees 70,000 is sold for rupees 35,000. Machine costing how much? Rupees 1 lakh. And accumulated depreciation 70,000. And that sold for how much? That is sold for rupees 35,000. Now we have to pass the journal entries. What is the first journal entry? First we need to transfer the cost of the asset disposed. So the entry is asset disposal account debtor to asset account. Here asset is machine. So write down the machinery account. Disposal or asset disposal account debtor to machinery account. How much? Rupees 1 lakh. This journal entry for transfer the cost of asset disposed. Clear? And after that we need to pass the journal entry for accumulated depreciation. How much? That is rupees 70,000. See here, 70,000. So the journal entry is accumulated depreciation account debtor to disposal account. That is rupees 70,000. Now next, record sale proceeds. Now thirdly, we need to record the sale proceeds. After accumulated depreciation, we need to record the sale proceeds. So what is the journal entry? Bank account debtor to disposal account. How much? Sold for rupees 35,000. So write down rupees 35,000. This is for record the sale proceeds. That is rupees 35,000. Now we need to find out whether it is profit or loss. Here see now disposal account, it shows a debit of rupees 1 lakh, right? Disposal account, see here. See, observe these three entries. Transfer the cost of asset disposed, transfer accumulated depreciation and record sale proceeds. Here disposal account, see the disposal account, only here first one debited disposal account, that is rupees 1 lakh. And here second, in transfer accumulated depreciation we credited the disposal account, and here also record the sale proceeds. Here also we credited the disposal account. So debit balance of disposal account how much? That is rupees 1 lakh. See, and credit how much? That is here. See, disposal accounts rupees 70,000. Disposal account that is credited, that is rupees 35,000. Totally it is rupees 1,05,000. Means what? There is a profit of rupees 5,000. So the credit, that is credit balance is more than debit balance here. So 5,000 is our profit. So what is the journal entry for profit on disposal? Sorry, see here, profit on disposal or asset disposal account debtor to profit and loss account. See here. So journal entry profit on disposal is disposal account debtor to profit and loss account. How much? That is rupees 5,000. Clear? So in this way we have to pass the journal entries. So the asset disposal account is used to calculate and transfer the profit or loss on disposal of a fixed asset. Right? So this makes the accounts neat and ensures that the asset account only shows assets currently in use. Clear? And this asset disposal account we will use, when we will use this asset disposal account, generally we will use when a part of the asset is sold. Here I have given the example also. Clear? So in this way we have to pass the journal entries under asset disposal account. So in the next class we will solve one practical problem under asset disposal account. If you have any doubts, please leave a comment. Thank you.